In 2014, Nigeria stood tall as Africa's economic powerhouse, boasting the continent's largest GDP and a future filled with boundless potential. It was a nation fueled by its abundant oil reserves, youthful population, and burgeoning industries. Economists marveled at its rapid growth, heralding it as the next big player on the global stage. Yet, a decade later, that same economy has plunged by a staggering 50%, leaving millions to wonder, what went so disastrously wrong? At its peak, Nigeria was not just an oil giant, it was a symbol of hope for the region. Its bustling cities buzzed with entrepreneurial energy, agriculture fed its people and neighbors, and international investors clamored to get a piece of the action. But as quickly as the ascent came, the fall followed. Oil prices tanked, exposing deep-rooted vulnerabilities that had been masked by years of unchecked prosperity. What followed was a cascade of challenges: corruption scandals, regional instability, and policy missteps that eroded trust and fractured the nation's economic backbone. Today, Nigeria's story is a cautionary tale, a vivid reminder of how even the most promising economies can falter under the weight of poor management and over-reliance on a single resource. But how did a nation with so much promise find itself on the brink? And most importantly, can it rise again? Stay tuned as we uncover the twists and turns of Nigeria's economic journey. And if you enjoy exploring stories like this, make sure to like, share, and subscribe to Economy Explorer, your go-to channel for decoding the world's most fascinating economies. Background on Nigeria's economic rise. In the early 2000s, Nigeria was riding the wave of what seemed like unstoppable growth. Its streets were bustling with optimism as the nation's GDP soared, averaging an impressive 7% annual growth. With its vast reserves of oil and natural gas, Nigeria became Africa's largest producer of crude oil, generating billions of dollars in revenue. But oil was just the beginning of the story. The country was emerging as a diversified economy, with agriculture, manufacturing, and telecommunications playing crucial roles in its meteoric rise. Agriculture, the backbone of Nigeria's workforce, employed over 70% of its population. Fertile lands and abundant labor supported growing exports and domestic food production, creating a sense of stability. Meanwhile, the telecommunications revolution transformed the country, granting millions of Nigerians access to the internet for the first time. By 2014, Nigeria had not only surpassed South Africa as the continent's largest economy, but also became a beacon of hope for what African nations could achieve on the global stage. But beneath the surface, there were cracks in this economic powerhouse. The government's reliance on oil revenues made the economy vulnerable to external shocks, while critical sectors like agriculture and manufacturing, though promising, remained underfunded and inefficient. Yet, at the time, the world watched in awe as Nigeria's star continued to rise. This rapid ascent led many to ask, could Nigeria maintain this trajectory and become Africa's first true economic superpower? Or were there hidden vulnerabilities waiting to drag it back down? As we dig deeper, the answers reveal a story more complex than anyone anticipated. In the next section, we'll uncover the critical turning point that shifted Nigeria's fortunes and set the stage for its dramatic decline. So, stay with us. The turning point, the 2014 oil price crash. In 2014, oil prices plummeted, sending shockwaves through global markets. For Nigeria, whose economy was heavily reliant on oil exports, the impact was catastrophic. Crude oil prices, which once exceeded $100 per barrel, fell below $60, cutting off more than 70% of government revenue and 90% of export earnings. The foundations of Nigeria's economic boom began to crumble almost overnight. Budgets that once relied on abundant oil revenues faced severe shortfalls, halting infrastructure projects and leaving public sector salaries unpaid. Inflation surged as the naira, Nigeria's currency, lost value, making imports prohibitively expensive. While oil dependence had driven years of prosperity, the crash exposed just how little progress had been made in diversifying the economy. The crisis rippled across sectors. Agriculture, once the backbone of Nigeria's workforce, was underfunded and unable to fill the void. Manufacturing, heralded as a potential growth engine, remained too fragile to offset the loss. Businesses shuttered, unemployment soared, and the cost of basic goods skyrocketed, leaving millions of Nigerians struggling to survive. The damage didn't end there. Public trust eroded as leaders scrambled to stabilize the economy through controversial measures like currency devaluation and borrowing, often met with protests. International investors, shaken by the turmoil, withdrew, further deepening the economic freefall. For many Nigerians, it felt as though the nation's economic miracle had been nothing more than an illusion. This pivotal moment wasn't just a financial crisis, it marked a reckoning. The crash forced Nigeria to confront deep-seated vulnerabilities that had been ignored during its boom years. But what were the long-term consequences, and could the nation find a way to recover? In the next section, we'll delve into the ripple effects and the challenges that reshaped Nigeria's economic future. Key drivers of economic decline. Nigeria's economic downfall wasn't caused by a single event. Rather, it was the result of a complex web of challenges that compounded over time. One of the most glaring issues was the country's over-reliance on oil. While oil revenues had fueled years of rapid growth, this dependence left the economy dangerously exposed to fluctuations in global oil prices. When the crash of 2014 hit, it wasn't just a financial blow, it was a harsh wake-up call. With over 90% of export earnings tied to crude oil, the collapse of global demand crippled government revenues, leading to budget deficits and stalled infrastructure projects. But oil dependency wasn't the only problem. Decades of mismanagement and corruption had deeply entrenched inefficiencies across all sectors of the economy. Billions of dollars intended for development often vanished into the hands of corrupt officials, leaving critical sectors like education, healthcare, and agriculture underfunded. These governance failures eroded public trust, making it harder for leaders to rally the nation during tough times. International investors, once optimistic about Nigeria's growth potential, started pulling out as concerns over corruption and instability mounted. Security challenges further compounded these economic woes. The rise of insurgent groups like Boko Haram destabilized large parts of the country, particularly in the north. This not only disrupted agriculture and trade, but also forced millions to flee their homes, creating a humanitarian crisis. Meanwhile, resources that could have been used for development were diverted toward military spending, further weakening an already struggling economy. Currency devaluation and inflation worsened the situation. As the naira lost its value, the cost of imports skyrocketed, driving up prices of essential goods. For many Nigerians, daily life became a struggle to afford basic necessities. And with unemployment on the rise, the gap between the wealthy elite and the impoverished majority grew even wider, fueling social unrest. Each of these factors fed into the next, creating a downward spiral that became increasingly difficult to break. Yet, the ripple effects of these challenges didn't stop here. In the next section, we'll explore how this decline impacted Nigeria's social fabric and reshaped its economic landscape in profound ways. Stay with us. Socioeconomic impacts. The economic decline didn't just hit Nigeria's treasury, it reverberated through every layer of society. For millions of Nigerians, the fallout meant a sharp decline in their standard of living. As inflation soared, everyday essentials like food, fuel, and transportation became almost unaffordable. Families that had managed to scrape by suddenly found themselves unable to meet basic needs. The frustration in the air was palpable, and for many, it was not just about lost wealth, it was about survival. Unemployment became an alarming issue. With businesses closing and industries struggling, millions of Nigerians were left jobless. The youth, which makes up a significant portion of Nigeria's population, bore the brunt of this crisis. Unable to find work, many were forced to rely on informal or low-paying jobs, while others turned to crime or even joined insurgent groups out of desperation. The promise of a brighter future for Nigeria's young generation seemed to dim with each passing year. Urban areas, which had been the epicenters of economic growth during Nigeria's boom years, saw growing inequality and unrest. Slums expanded as rural to urban migration continued, with people seeking better opportunities that no longer existed. In the north, where conflict with Boko Haram raged, entire communities were displaced, leading to a humanitarian crisis. Refugee camps swelled, but resources to support them were stretched thin, leaving millions in dire conditions. The social fabric began to unravel as economic inequality deepened. The wealthy elite, insulated from much of the economic turbulence, continued to thrive, while the middle and lower classes saw their fortunes evaporate. Tensions between these groups heightened, sparking protests and civil unrest. Corruption and mismanagement only fueled this anger, as citizens lost trust in a government that seemed incapable of addressing their suffering. The ripple effects of this decline were staggering, affecting not just Nigeria's economy, but its very identity. In the next section, we'll explore whether Nigeria can rise from these challenges and what lessons can be learned from this cautionary tale. Lessons learned. The story of Nigeria's economic decline is a sobering reminder of how unchecked vulnerabilities can unravel even the most promising nations. One of the clearest lessons is the danger of over-reliance on a single resource. For decades, oil served as both Nigeria's greatest asset and its Achilles heel. When the global market turned against oil, the lack of diversification left the nation exposed, unable to cushion the blow. Countries like Botswana, with fewer natural resources, thrived by focusing on stability and good governance. Nigeria's experience highlights the importance of building a resilient, multifaceted economy that can withstand external shocks. Another critical takeaway is the cost of corruption and poor governance. Billions of dollars intended for development were siphoned off by corrupt officials, leaving vital sectors like education, healthcare, and agriculture starved of resources. This not only stifled economic growth, but also eroded public trust, creating a cycle of inefficiency and mismanagement. Nigeria's situation underscores the need for transparent systems and accountable leadership to foster sustainable development and investor confidence. The social impacts of economic mismanagement also offer valuable insights. Growing inequality and unemployment created a perfect storm for unrest, fueling crime and extremism. This demonstrates the necessity of inclusive policies that prioritize equitable growth and provide opportunities for the most vulnerable populations. Investing in education, skills development, and social safety nets could have mitigated much of the social fallout Nigeria experienced. Perhaps the most universal lesson is the importance of forward planning. While Nigeria basked in the glow of its economic boom, little effort was made to prepare for future challenges. This lack of foresight turned a temporary downturn into a prolonged crisis. A strategic focus on infrastructure, innovation, and human capital could have positioned Nigeria to thrive even in the face of adversity. As we explore the next chapter of Nigeria's story, the question remains: can these lessons pave the way for a brighter future? Or will history repeat itself? Stay tuned as we examine the possibilities ahead. Is recovery possible? In the face of adversity, nations have risen from ashes to redefine their destinies. Nigeria, with its abundant resources and youthful population, is no exception. But the road to recovery requires more than hope. It demands bold reforms and strategic investments. Can Nigeria harness its potential and reverse the tide of economic decline? The first key to recovery lies in diversification. Nigeria must break free from its dependence on oil. Agriculture, for instance, has immense untapped potential. With over 80 million hectares of arable land, the country could become a major food exporter. Yet, less than 1% of this land is irrigated. By investing in modern farming techniques, storage infrastructure, and market access, Nigeria could not only feed itself, but also generate significant export revenue. Equally critical is reviving manufacturing and industry. With one of the largest populations in Africa, Nigeria boasts a labor force that could power factories and assembly lines, turning the nation into a regional manufacturing hub. Policies that incentivize local production, paired with improved infrastructure such as reliable power and transportation networks, could unlock this sector's potential. Restoring investor confidence is another vital step. Years of corruption and instability have scared off foreign investors, but recent efforts to clean up governance and reform policies offer a glimmer of hope. Transparent systems, anti-corruption measures, and streamlined regulations can signal to the world that Nigeria is ready for business. At the heart of recovery, however, is its people. Education and skills development must become national priorities. A well-educated workforce not only drives innovation, but also attracts high-value industries. Programs focused on vocational training and entrepreneurship could empower Nigeria's youth to create opportunities rather than wait for them. The challenges are steep, but the rewards are immense. As we delve deeper into Nigeria's path forward, we'll uncover the strategies and stories that could shape its next chapter. Can Nigeria rise again to claim its place as Africa's economic leader? The answer lies in its willingness to embrace change. A nation at a crossroads, Nigeria's path forward. Nigeria's story is a powerful mix of potential and challenges. In 2014, it held the title of Africa's largest economy, a beacon of hope for the continent. Yet, as we've seen, over-reliance on oil revenues, governance failures, and social instability plunged the nation into an economic decline that redefined its trajectory. The key question now is whether Nigeria can turn these hardships into opportunities for lasting growth. The lessons are undeniable. Relying too heavily on a single resource left the economy vulnerable, underscoring the urgent need for diversification. Corruption and mismanagement eroded public trust and investor confidence, making transparency and accountability essential for recovery. But Nigeria's greatest asset isn't oil, it's its people. With a youthful, vibrant population, the potential for innovation and progress is immense. Recovery demands bold reforms. Investing in education, infrastructure, and industries can help Nigeria rebuild its foundation. Leaders must prioritize long-term stability and equitable growth over short-term gains. The challenges are daunting, but history has shown that nations can rise when they embrace change. Thank you for joining us on this journey through Nigeria's economic challenges and opportunities. Don't forget to like, share, and subscribe to Economy Explorer to keep uncovering the forces shaping our world. Check out the video on your screen for more fascinating global stories.